We're talking about trading tactics with Oliver Velez. Oliver, give us some of the top ideas that investors, traders should be employing.
Well, actually, there's a simple but extraordinarily powerful tactic that we teach all of our traders. And I think every trader in the world should follow this and should actually take advantage of this simple thing. It revolves around a wide range, fat, long green bar on a chart. And it simply means what a large, fat, wide range green bar means is that the stock opens at a certain price and closes significantly higher than its opening price for that day. Now we're looking for an abnormal close above its opening price in relationship to the prior month and a half to 2 months. So if we have a stock that is closed significantly higher from its opening price, let's say it's 2 to 3 times the average ratio between the bars from open to close, we call that a tall, wide range bull elephant bar. We look for elephant bars that form for the first time in the last 2 to 2.5 months. We buy into those bars with protective stops just underneath the bar. And this we call an igniting bull elephant bar that often is one of the clearest signs that institutions are in agreement on a specific day at a specific time. These wide range bars cannot be formed by individuals, they cannot be formed by small groups, they can only be formed if the consortium of institutions that play that particular item agree at the same time. And what's interesting is that these institutions, when they pile in at a single point, it's not going to be the last pile in. And so we're looking for more continued upside after that. So that's one very, very simple tactic that we teach our traders to follow. And we also teach them to take advantage of every single one. So not just to buy the first one they see, but any subsequent one that forms after that.
Now, talking about the charts and the formations you see on the charts, do you recommend using candlesticks?
Oh, absolutely, absolutely. It is the form of choice. Simply because, not because there's any magic inside the candlestick bar, if you will, but just simply because it's visually easier for the trader to detect bullish buying and bearish selling in a stock. So a fat, elongated bull elephant bar is very easy to spot on the chart. It's longer, it's taller, it's fatter, it has more green in that single bar than any of the bars to the left of it. If it's a fat, giant red bar, that's bearish. It indicates that there's liquidation going on in the stock, particularly if it's more wide range than most of the bars to the left of it. So it's just visually easier for the trader to detect the flow of money.
Now, what about a situation and when there's some news and that's what sends a price higher or lower sharply? How should traders respond to that?
Well, they should respond to the action of the stock in relationship to news, but in terms of location to the underlying stock's 20-period moving average. We are great focusers of the 20-period moving average. So if news has taken a stock extraordinarily high above its 20-period moving average, that is not a moment to buy. If news has caused a bullish movement marginally above the 20-period moving average, it's a potential buy, but not extraordinarily high above the 20-period moving average.
Any examples that you can cite that investors and traders can go back and look on the chart and see how it's played out?
I do have an interesting currency example. And if our viewers were to take a look at the Swiss franc in a daily time frame, they would see a dramatic rise in the Swiss franc that got extraordinarily high above its 20-period moving average. At the end of its move, it put in one of the biggest single green bars of its entire 2-year run to the upside. That marked a significant top that we actually sold into, and as many people who have been watching the Swiss franc realize that it's collapsed ever since. So these distances of far above the 20-period moving average and far below the 20-period moving average creates great trading opportunities.
And do you currently own the Swiss franc?
No, we've shorted the Swiss franc from the high, so we are currently short the Swiss franc, yes.
Thank you so much for these insights.
Thank you.
You're watching the MoneyShow.com video network.